Hi guys, it's Stock Trader Max here and welcome to today's video. This is my first official video here on YouTube, so thank you very much for all tuning in. Today we're going to be talking about my largest stock position that I currently hold right now, which is in a company called PayPal. Now I'm sure 99% of you sat at home have heard or have used PayPal in the past. Now PayPal, as I just mentioned, is my largest portfolio holding. I own $657,000 worth of the stock, PayPal Holdings Incorporation. And as you can see, at the moment, I'm currently down 2%. I think my average buy-in is around $65.50 a share. Stock's currently trading at $64.15. So hence, that's why I'm down 2%. So I'm losing $13,000 at this moment in time, but I'm not worried one little bit because I believe that PayPal is going to be one of the best investments in the market from now, perhaps over the next 12 to 24 months. So I just want to quickly show you PayPal's chart. PayPal's chart looks very ugly at this moment in time. Well, it's kind of beautiful, but ugly at the same time. Beautiful because of the opportunity that it currently presents, but also ugly because, we're kind of in an 80% drawdown from the all-time high here. So what I'm going to do here, I'm going to kind of show you where pre-COVID times were. This was pre-COVID, and PayPal was trading at around $122 a share. Then, of course, COVID hit. The Fed started slashing interest rates, and everyone was in lockdown, and the market plummeted, and PayPal sunk all the way down to $82 a share. And then, of course, all the stimulus deals come through. People were getting sent money whilst they were sat at home, and PayPal stock went parabolic. In terms of a percentage move, we actually rallied around 270% to an all-time high of approximately $310 a share. So a parabolic move here off the lows of $82 when COVID first hit and lockdowns were first announced, all the way up to $310. And why did this happen? Well, this happened for one reason. People were stuck at home during lockdown, but they were getting sent stimulus paychecks from their government, meaning that they had money. They weren't leaving their home, so they couldn't really spend their money going out to restaurants or on holidays. So what did they do? They upgraded their TVs. They bought, a lovely massive TV. There we go. A lovely massive big TV like that. They upgraded their iPhones, their laptops, you name it. And, money was being spent. And of course, the way or the method to spend this money was via online payment providers such as PayPal. So that is why this stock went parabolic towards the upside. We traded all the way up to $310 a share before peaking back in August 2021. And what happened around then? Well, we actually come out of lockdown, vaccines were created, and people were able to travel again. And all of a sudden, we kind of had a stock that benefited so much from everyone upgrading their electronics at home, etc., and buying stuff, upgrading their homes via online payment providers such as PayPal, for example. And all of a sudden, that era ended, and we entered an era where people wanted to travel. They wanted to make up for the lost 2 years that they'd spent stuck in their home doing nothing. So people started traveling more than ever before. And of course, when you travel, you spend a lot of money, and people just didn't need to go and buy the latest iPhone. They didn't need to upgrade their laptops because they already had the latest ones. And this stock saw a huge move to the lows. And of course, there was lots of inflation created, right? I kind of look at this as a supply and demand era where demand was through the roof, but there wasn't that much supply. So what did shops and people do? Well, they hiked the prices of their products, and that caused an outrageous amount of inflation. I think in the US, inflation peaked around 13 to 14%. So the Fed was given no choice but to hike interest rates. So we went from almost 0% interest rates to 5.25%. And that, of course, sent PayPal stock plummeting. And we did see, in fact, an 80% drawdown, from those highs that we saw back in August to the lows that we saw back in October 2023. We saw an 84% drawdown in the stock. But I believe that at this moment in time, PayPal offers a fantastic buying opportunity. People are treating PayPal as if the company is dead. It doesn't earn any more money. That's what the stock price reflects to me. In fact, if we just look at where PayPal is trading right now at $64.10, last time it was trading here takes us all the way back to 2017. Now, I can tell you in 2017, their annual revenue was set at around $13 billion, where last year in 2023, they reported a staggering $29 billion. So, their business has grown by over 100%, yet their stock price is trading at the exact same price. Same for their net profit. Their net profit coming just under $5 billion last year. So their financials have grown substantially. However, their stock price is trading at the same price it was trading at, back in 2017. And that just doesn't make sense to me. And hence why I do believe this company offers some fantastic value at current price levels. Now, I just want to quickly show you one of my favorite charts of PayPal. I posted this on my X page. It got around 120,000 views, which is pretty cool. And this chart just shows you how powerful the earnings have been with PayPal. If I just quickly move me up here, for example. Now, the yellow line on your screen is the earnings per share. It shows you how, despite the 84% drawdown that we've seen in the PayPal stock price, earnings has continued to rally and trade higher over the past couple of years. So whilst the stock price has actually deteriorated, so obviously the purple line is the stock price and the yellow line is earnings per share. Like I said, this is one of my favorite charts, and it just shows you, people are treating PayPal as if the company is dead, and that that yellow line should be tracking the actual stock price, but it's not. Look how disjointed it is, right? If we just go back to past 5, 6, 7, even 10 years, right? This is the most disjointed the earnings per share and the stock price has ever been. And I just think that, at some point, one of these lines has to move. It's either going to be the stock price that catches up to the earnings per share, or the earnings per share is going to fall rather significantly, and I just don't see that happening. I think it will be, the first one where the stock price actually catches up to the earnings per share. Now, I did also put another post out on X. I think this one got 130,000 views, and I'm just going to kind of go through. I put like a checklist as to why I like PayPal so much. Firstly, let's start with the fundamentals. Firstly, they have got a brand new CEO, Alex Chriss. He joined in October. Now, before the last couple of years, obviously, PayPal had a different CEO, Dan, and he was getting very old. He was in his late 60s or early 70s, and he was, quite frankly, asleep at the wheel. And that's kind of allowed other companies such as Google and Apple to launch products such as Apple Pay and Google Pay, which kind of started eating some of PayPal's lunch. But with Alex Chriss now in charge, I do believe that PayPal are going to take back what was initially theirs, and they're going to, really take back some market share here. And then, of course, with Alex Chriss, he's brought in a new management team. I like this, very motivated management team. They've been employing lots of new employees over the past couple of months. We've seen that obviously posted from PayPal's Twitter page, which is very, very interesting. Secondly, 18% authorizing buybacks. Now, PayPal have been authorized to buy back up to $11 billion of their own stock. I love it when a company has buybacks like this. Very, very, very bullish. And then record free cash flow. At this moment in time, PayPal has a record amount of free cash flow. The stock is down 80% from its all-time high from that $310 a share price, as I just mentioned. And now, of course, many of you may have seen this, but back in, I think it was January, Alex Chriss come out with something called First Look, and he announced 6 new features that are going to appear on the PayPal app, and this is to rival Apple and Google Pay. So this is basically Alex Chriss launching products that PayPal haven't seen before, but the world have seen with the likes of Apple Pay and Google Pay, but it's to catch up to our rivals that have been eating our lunch over the past couple of quarters. And I really, really like this. It just shows that Alex Chriss is on the ball and he wants to get back what was initially ours. And then one thing that I really like here is the PYUS dollar. Now, not many people know this, but PayPal actually have their own stablecoin, and it is growing substantially. And I think that this is a very, very bullish catalyst over the upcoming years, and many analysts don't currently cover their stablecoin. Guidance is very low, forecasting for no growth. Back in February, I think it was February 7th, PayPal reported earnings. Stock sunk 11% the next day. And this was because it was pretty much the first earnings call that we got from a new CEO, Alex Chriss. And Alex Chriss and their management team, along with the CFO, Jamie Miller, they basically sandbagged their guidance. They come out and they did exactly what a new CEO at a new company should do, and that is they should sandbag. They should basically say that the guidance is going to be as low as possible, so it eliminates all high expectations. And that means going forward, this now sets PayPal up very nicely to beat expectations, if that makes sense. So I quite like how they sandbagged their guidance, and what's even better is that the stock price has actually recovered back to the same price level that PayPal was trading at, which was around that $65 range when they last reported. So, the stock has recovered all of the losses, and of course we go into earnings in a few days time. And of course, record transactions in the past 12 months. Now, I don't actually have a chart of the record transactions, but as inflation has increased substantially over the past 12 months, so has the transaction figure from PayPal. And that's obviously normal. The higher prices for products and services, the more people are paying, the more revenue, the more transaction value that PayPal will receive. Earnings per share is at a record high. I think I just showed you that on the last graph. We have earnings per share currently at a record high for PayPal. And then when we look at the forward PE ratio, the forward PE right now for PayPal is sitting between 11 and 12. Which is very, very low. I think the S&P 500 is trading at a forward PE of roughly 22. So it just shows you, even compared to the broad market, PayPal is substantially undervalued. PS ratio 2.2 compared to PayPal's historical value, that is very, very low. Stock is significantly undervalued compared to its historical averages when focusing on the PE and the PS ratios. Stock is significantly undervalued compared to the S&P 500 average PE ratio, as I just mentioned. Now, the DOJ lawsuit against Apple, this is going to take a very long time, but basically the DOJ has opened a lawsuit against Apple saying it's a monopoly, especially in its payment sector, where it doesn't allow third-party payments or payment providers such as PayPal to offer their services. So that's something definitely to keep an eye on, but it will take probably 4 or 5 years to play out. $6.1 trillion currently sat on the sidelines. There's a lot of money sat on the sidelines by investors who haven't really participated in the market as of recent. And at some point, I think that we are going to see that money be reinvested into the market, into the undervalued part of a market which hasn't seen such a large surge over the past 12 to 24 months, dating back to pretty much the beginning of 2023. So I think PayPal is definitely in with a good chance of receiving some of that $6.1 trillion that's currently sat on the sideline. Interest rate cuts are coming. Obviously, the Fed has teased that cuts are coming. We currently have interest rates sat around 5.25%. At the moment, I think the bond market is pricing in 2 to 3 cuts this year. So I think that will benefit PayPal as it will benefit most of the other value parts of the market. And then, key evidence of the market broadening out. We've seen this over the past couple of days / weeks. We've seen stocks like Nvidia, for example. The past month, stocks like this, they're down around 14%. Stocks like Supermicro, for example, that's down. Meta's down from its highs. We're seeing some of these big high-flying stocks that surged during the year of 2023. They're all starting to come down now. Meta's down around 16% off its highs, where when we look at PayPal, PayPal the last month or so, sure, it's down, but it's only down around 6%. So we are starting to see signs of broadening out in the market. In fact, the past couple of days, we've seen the S&P 500 end in the red, but PayPal's actually ended in the green. And these are very positive signs for what's to come. Then if we just go more towards the technical side of things, now this is one of the most important features, and that's that PayPal has actually broken above its 200-day EMA. So if you're unfamiliar on how to find the EMA lines, it's very simple. You just go on the indicators here on TradingView, and then what I do, I type down EMA and then 50-200. And this brings up two of my favorite indicators, which is the 50 and the 200-day EMA, the blue and the red line on your screen. And as you can see, in recent weeks, we actually have managed to break above the 50 and the 200-day EMA. And this is the first time that this has happened since PayPal was trading all the way back. I think it was around $220. Yeah, so $280 a share back in 2022. Before we had that massive correction, of course. So, this is, we are actually about to get our first bullish crossover. That's where the 50-day EMA pierces above the 200-day EMA. So that's when the red line breaks above the 200-day EMA. Hasn't happened yet, but when it does, that will be a very bullish buy signal for the markets. And last time that happened was actually back in 2020, before we had that 270% gain up towards the all-time highs of $310 a share. And then just looking at a few more technical catalysts here, we've broken out of a 3-year downtrend. That should be very noticeable. If we just kind of zoom out here, you can see the past 2 years, we've kind of been in this descending downtrend here, but recently we've just broken out of it. It's taken over 2 years for us to break out of it. And in my opinion, the next area of resistance is at around $68. But if we can break above $68, that then opens up I would probably say $75 a share, because recently we did form a gap back in August 2023. So if we were to go and close this gap, guys, that would offer some fantastic upside. Just looking in terms of a percentage perspective, that's 20% towards the upside. So that'd be very, very good indeed. The next one was the first British crossover since 2020, as I just mentioned. Two huge gaps to fill at 175 and 230. So very similar to this gap here, which would be closed at around $75 a share. If we just zoom out, obviously there was a massive gap that formed back here in February 2022. That, for that to be closed, you'd have to trade up towards $175 a share. And then there was another gap that occurred back here in November, and for that to be closed, we'd have to surge up towards $230 a share. So from current price, that would represent a surge of around 257%. And then last but not least, if we just look at the monthly RSIs, we have a monthly RSI that's currently trading at around 39. So we're nowhere near considered to be overbought. In fact, we're towards the lower end of the spectrum. MACD has turned positive on the daily and weekly, monthly charts. And, we've now spent the most amount of days above the 200-day EMA since 2021, when we were trading at $296 a share, which I just showed you a few moments ago. So there's definitely evidence here from a technical and a fundamental perspective that PayPal may have bottomed and may be trading high. And one thing that I really like about this name as well, if I just quickly take you to TipRanks, the average price target for PayPal currently sits at $67 a share, which is roughly 5% higher than where we currently find ourselves trading. In fact, analysts are not very bullish on this stock at all. We have 20 hold, 16 buy, 0 sell. But what I'm looking for over the next couple of quarters is for a lot of these 20 hold analysts to actually flip to becoming a buyer of the stock and hiking their price target. So, I think that PayPal has got a real good chance of achieving $90 to $100 a share later on this year, as the market sees this rotation from the big high-flying AI names and it comes into the more appreciated part of the market. And I think a great example of this, there's a few stocks that I think found themselves in a very similar position to PayPal, and that was Netflix. If we look back at Netflix, what happened to Netflix back in May 2022? Well, Disney was on the scene. Everyone was coming out saying, Netflix is dying. People coming out of COVID. So very similar to PayPal. People were traveling with their money. They're not sat at home watching TV. Disney's eating their lunch, and analysts become way too bearish. And what happened with the Netflix stock? Well, guess what? Analysts were actually wrong, and people come back and look at that 281% surge from the lows to the highs. And I still believe that this stock has more upside. And then, last but not least, Meta. What happened with Meta back in 2022? Well, analysts were selling it. Why? Because they were saying TikTok were eating their lunch, and of course there were a few other reasons as to the amount of money that Mark Zuckerberg was dedicating towards the metaverse. But nevertheless, Facebook from the highest to lows saw a fall of roughly 76%, so very similar to PayPal. But what happened? Analysts become too bearish, they got the story wrong, and from the lows to the highs, Meta rallied 469%. Now, am I saying that PayPal is going to be the next Meta or Netflix? No, I'm not. Okay, I completely appreciate they're completely different businesses, but what I am trying to point out here is that just because analysts are bearish, I actually see that as a positive. I think if you're buying a stock where analysts are overly bullish, well then there's a good chance that most of that's already priced into the stock price. I'm a value investor. I like finding stocks like PayPal, which are completely hated by analysts, by Wall Street, but are still continuing to post growth, just like this, where the earnings per share is increasing. And I think just to kind of conclude today's video, I think that's one thing that you should all take away here, is that people are treating PayPal as if the stock is dead, where it's really not. It's far from it. Their earnings per share continues to grow, their transaction value continues to grow, their revenue continues to grow, their free cash flow continues to grow, their net profit continues to grow. So does it deserve to be trading at 2017 prices? In my opinion, no, it does not. Far from it. And I think that this will change as we see the next earnings report on Tuesday, which is before the bell on Wall Street. And I'm very, very excited for that. So, as I mentioned at the start of today's video, I currently have $657,000 invested into PayPal at $65, so roughly around current prices. I bought back in February which was back here, of course, and I have rode a drawdown over the past month or so of roughly 14%, and it doesn't faze me at all because I know that ultimately this stock is going to trade significantly high, and I think that could potentially start when they report next Tuesday. We are currently trading in a minor cup and handle pattern in my own humble opinion, and of course we have some resistance here at $68 a share, but if we're able to break above $68 a share, that then opens up the door towards $74 a share, where we can go and close this gap that we formed back last year. I think it was I think it was around August time. So, you know, I am very, very bullish, and I think if we were to close that gap, I think it offers a roughly around 14% upside from current prices. There we go, 14%. So next Tuesday, PayPal report earnings. Stocks currently trading at 2017 prices. Record earnings recently, so I'm a buy here, and let me know what you guys think. But thank you for tuning in for today's video. I'm going to keep you updated. Of course, I'll probably post my next video after PayPal have reported next week and update you all with the latest figures. But I'm long here, invested in PayPal at $65 a share. Wish me luck.